What's up, guys? Hector Rodriguez here. I'm gonna do a breakdown of a trade that I did on Tuesday, and that's the only trade that I've taken all week. Market's been real price action has been really bad all week. I haven't liked it. I haven't seen good setups. Tuesday we took a trade, we got out early. It kept running like crazy. So this is where me as a trader, I have to psychologically get better at these things, right? Psychology is everything. But I'm gonna break down everything that my thought process behind it. So the three things that you want to look at before analyzing if you want to take a trade is market structure, right? Bullish or bearish? Is the market going up or is the market going down? Just understanding market structure alone, even if that alone is the only thing that you get, that alone can keep you as a break-even trader and slightly profitable. Just understanding market structure. Okay, so this is it. Basically, this area is market open, New York Stock Exchange on Tuesday. Okay, so I'm filming this on Thursday. That's why we have price action over here, but this is basically where the trade happened. Okay, so just market structure alone, right? What direction is the market moving, right? It's very obvious that this area right here, right? This is the day that we traded, right here. This is the day that we traded. Market structure is bullish, okay? Price action is making higher highs, okay? Higher lows, higher high, respect to this area, higher high, higher low, higher high, higher low, okay, right? So market structure is bullish. Now that we've identified market structure, we decide that we want to, if we take a trade, we want to take a buy, okay? Even when you zoom out, look at this market. This is a good way to kind of just be able to, these trend lines, just be able to kind of tell what direction the market's going. So if the market's trending up, there's no reason we should be looking for short sales, okay? We're looking for buys. And then within that direction, we are looking at the second thing, right? We're looking at support and resistance. So for this day, we're looking at support levels, okay? So if I take this off, this is the day we traded, okay? So now we have a bullish bias, right? We do kind of think, we kind of look for things that complement that bullish bias, okay? So things like this, okay? Right, price broke this level right here. This swing high got broken right here. Even though these minor swing, this swing low got like minorly broken right here and right here. Overall, right, when we zoom out, the market is still very bullish, okay? And it's still somewhat, somewhat of a support level right there. That's basically a support level, even if it slightly wicks in and out, okay? It's for the most part holding this level. And if you actually look more to the left, it actually respected this level right here, okay? So even though it took these minor lows right here from this area, it still respected this area over here, okay? So a lot of traders, they'll see these minor breaks to the downside and they're like, oh, it's going down, it's bearish. No, just kind of zoom out and look at the whole market, right? This swing high is very important. This says a lot because it broke this swing high and it broke it by a lot, okay? Another thing that we're looking at, look at the moving average, the 200, the 13, it's just kind of trending up. We like trading away from the moving average. So now that we've identified market structure, we did identify, support and resistance levels. Okay, so we have this resistance level up here as well, right here. Okay, so support down here, resistance down here. If price were to kind of break below these levels and this level right here, then we would be maybe short sell buys, because now that it's broken these levels and these levels, it might come down here to this level. And if it comes down to this level, it might come down to these levels over here. But it didn't do that. So we are bull biased, okay? So now that we've identified market structure and kind of support and resistance zones, right, when we're looking for a buy, it makes sense that we buy as close to support as possible. Okay, so we want to buy in this area, right? When price is kind of up here before all this happened, we don't want to take a buy over here because there's literally all this price action down here, okay? There's all this price action down here where price can get to, okay? So finally price got to this level, okay? This is New York Stock Exchange. This is the time that we trade. Price got to that level and it rejected it right here, right? Held this support, held this entire support area. Excuse me, my mouse is messing up. Okay, and then right, we had kind of a little bit of a trend right here. We had a little bit of a trend. We love when trends are broken in the direction that we want to trade into. All right, we're looking for buys. So we had a little downtrend right here. We had this little trend channel, and price right held these two support levels. Wicked, right, we had these wicks down here. Then we had this bullish engulfing candle right here, this blue one, which engulfed this last bearish candle, and the two candles before that were wicking from the downside. So that's indicating that price is really holding at this level. Okay, so price broke structure out of this trend. Okay, broke these little highs right here. Out of that trend, broke these little highs. Okay, now that we've identified market structure and we've identified the support levels that we'd like to buy into, we are looking for the gap in the market, right? We're looking for that demand zone and that gap in the market. Okay, what's a gap? A gap is basically this little area right here. Right, there's a gap right here, which is the bottom of this purple wick, this purple candle, which is bearish. I just have it purple and blue instead of green and red. The bottom of this candle and the top of this candle, okay? The top of the second candle behind it, okay? That's the gap right there. This is the gap, okay? All gaps must be filled. So when we see price break out of structure, which it did right here, broke out of this trend channel, around our support area, it created a gap, right? This engulfing candle created a demand push, okay? This created a gap in the market, right? The gap is basically, when you're looking at buys, the candle that pushes up, excuse me, the candle that pushes up, the demand candle before it, right? And then wherever you think the gap is, the candle after that one. So the candle before it, which is this one, right, this purple one, and then wherever you think the gap is, which I think it's right here, I know it's right here, the candle after that, okay? So the bottom of that candle, of this, the second candle, the bottom of that one, and the top of the candle before the engulfing candle. So this one right here, the top of that one. And if you were looking for short sales, it'd be the other way around, right? You would look for, this would be an example. This would be an example of a gap on the short side. This little area right here. Okay, so there was a push right here. There was a push right here to the downside, okay? It's the bottom of the candle before it, right? And then wherever you think the gap is, which this was that big push, the candle after that one. So this one, the top of that candle. So there's a gap right here, okay? All gaps must be filled. And if you actually look, this was in London session. If you actually look to the right, price came, touched that gap, filled this gap perfectly over here, and then came back down. So all gaps must be filled. This is very important. This is very crucial. Okay, the gap was filled. Okay, so price action went up. The gap was filled. Okay, this is the demand zone right here. Let me take this right here. This is the demand zone. That's the demand zone. The gap was filled. But look how price just filled that gap perfectly and just wicked out of it. Then we had the breaker structure to the upside. Okay, we had breaker structures to the upside. We basically set our stop loss below those levels, set our stop loss at that breaker candle, below these levels, below this neckline, okay? And if you look, this thing actually went for a 1 to 15, which is insane. And I did not take the majority of that at all. I got out basically got out around this area right here. It was like slightly over a 1 to 1. Okay, why did I get out? I should have been patient. I should have waited for, right, there was this minor swing high right here from these levels. I very well knew that price was going to get to this level, and I didn't have patience, honestly. That's something that I have to work on. I didn't have patience. I saw this order block here to the right. And I thought price might get to this and start rejecting but it very well pushed right through that and then got to these highs, came back, hit some support right here, right off these levels, and then kept running. This could have been a huge day for me, but I only made what, $376. It was a great trade. It was a great trade. It was a great setup. I should have really understood the overall market and have more confidence. That price had to get back up here, and it very well, blew past that. But basically, that's what you want to do. You want to overall see, okay, where's the market going? Is it going up or is it going down? That's one. Two is there a trend that has been broken around support levels? If we're looking for buys, if the market is bullish, is there a trend that is breaking in the direction that we want to buy around very key support levels, right? That trend was right here. If you zoom out, you have all these little supports right here, right? Support, broke up, support. That trend was right here, okay? The trend was right here. Okay, that was the trend. Right, support levels down here. The trend was right here. Basically saw price action get to these very key support levels around our kill zone time, right? New York Stock Exchange open. And we had that break to the upside, okay? And then obviously, like I mentioned earlier, the moving averages, right? The 200, the 13 kind of just trending up. We like trading away from the moving averages. That just gave us more confluence, more confidence in the trade. And then, right, we had the break of structure, came back, filled the gap, right? That's the third thing. So market structure is first, direction of the market, okay? Second is support and resistance levels, right? We want to take our buys and sells off those levels, okay? And is there a break of structure around those levels that creates a gap, right? The third thing is that gap. Does it reject that gap and then break back up into the direction that we're trying to, position ourselves into, which in this case it's a buy? Then that's what happened here. We took our buy, put our stop right under that neckline, right under that last wick, and it was a wrap. Even if I had patience and held it to right here, it would have been a 1-3. But that's it right there, guys. If you have any questions, feel free to comment down below. I'm gonna have my socials down there too, so feel free to send me a DM if you have any questions. Peace out.